Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. A lot to get to today. We had Brazil stocks and aluminum trading up in the overnight session. We have earnings from Lennar, a couple interesting ratings. We had an interesting new street high price target on Twilio. We have a note on the energy stocks. Nike caught a downgrade. GE held up yesterday, surprisingly, despite questions about its credit. We'll talk about that. So a lot to get to on our show. Our guest today will join us at 8:35. He is David Russell, the VP of Content and Strategy at Tradestation. Before I throw to Joel, want to remind you folks that the Benzinga FinTech Summit is coming up November 14th in San Francisco. If you want to meet the leaders in the brokerage and payment space, go to bzsummit.com. If you enter the promo code PMP, as in pre-market prep, you will get half off your ticket to the conference. Again, it's November 14th in San Francisco, bzsummit.com. Now, Joel, what is happening in the overnight session?
We're trading up nicely, 9.5 handles at 29.38. Caught a bid just below your closing price at 28.50, your pre-market low, 25.75. That looks safe for now. We're almost 13 handles above it. Keeping an eye on a couple levels above the market now. 42 even. That was Monday's high. And your all-time high, 29.47. That was made on expiration Friday. Crude trading in the green here by a nickel, 75.28, holding on to those gains from the end of last week and on Monday. Gold back over 1,200, had a pop yesterday, no follow through as of yet, trading down 30 cents at 1206.70. And silver itching its way back up towards $15. That's up 5 cents here at 15 or 14.75. Dennis, how you doing this morning?
And a fast market as always here, Joel. Lots going on. So trying to do some active trading here. Looking at Brazil, looking at aluminum prices, looking at value versus growth, just looking at a lot of stuff here this morning. Head is on a swivel.
All right, let me just real quickly, I just want to share something from the chat yesterday. As you guys know, you can private message us here if you just click on it and get some individual input. And just I want to share this from Freeman 101 yesterday. And he just said, thank you so much for taking the time to help me out today. You and Dennis pointed out on the show a few days ago that many people are making money trading because the market has been good for 7 years. Today, I came face to face with a choppy market and got chopped up. It was probably the best thing that could have happened to me. I see how bad of a trader I am. With that said, I do listen to you guys and try to stay away from the fast money. And he just went on to say that he watches the show real closely, and he's going to try and get Dennis, you, to buy me a steak dinner. But
he's going to try to get you to win a bet.
and Stock Hunter owes me a steak dinner. So basically,
no, we are doing that. You already tried to factor that out to me before. No? It's not happening. And you're not, and I know he was kind of saying, he's a bad trader. Not necessarily at all. It's just about learning how to trade in different environments. I think anybody who has learned to trade in the last 5 to 6 years has learned a style that has been indicative of a very strong market. So you got to learn different styles. We haven't really had the environment to learn that in, though. So it's not even any, if you're newer to trading, you don't know how to trade down markets. It's not your fault. We haven't had a down market really for 7 years. We've had some sideways market, but we haven't had this bear onslaught to really learn it. And I mean, I learned by trading in the tech blow up in 2001. That's how I learned to trade down markets. And then I had it again. And that experience that I got from 2001 came in big time in 2007, 2008, 2009, how to trade those markets. So you obviously, Joel, you learned right away. Because you were there, what on the floor for a month, and we had the Black Monday.
Yeah, that was a long time ago. And your experience during the tech bubble, helped you, during the financial crisis. But I just wanted to point that out. You can always cut back your size, or if you get too fixated on one stock, move to another sector, or there's a lot of different things you can do. But I just thought that was interesting, and I wanted to share it here with the crowd.
It's nice to get feedback. We're going to have one other, somebody else tweeted to me. They tweeted a question they wanted to know, and me talking about my first 5 minutes of trading, because I talk about it a lot. Obviously, I'm not on the show at 9:30 to 9:35, but I execute a lot of trades in that first 5 minutes, exiting orders from overnight, entering new orders that I feel like stocks are opening. So I think I'd love to, take a 10-minute segment, maybe from like 8:50 to 9 o'clock, right after our guest, where I can really break down that opening 5 minutes for me and how I handle it.
That's great. We'll do it.
So we'll schedule that 8:50. So if you're listening there and you want to know a little bit more on how I trade the open, we'll do it 8:50 to 9 o'clock. But in the meantime, we got a lot of stocks to talk about here, Joel. We'll let Joel take the lead today. Where's Joel want to go?
Let's.
He doesn't know.
What about the?
He wasn't ready for that, because I always take the lead, or Spencer takes the lead. We never let Joel take the lead. Take the lead, Mr. Elconin.
Let's go. Let's go aluminum.
And what's happening here overnight is you're seeing aluminum prices explode, and this is because one of the largest producers, Norsk, I believe is that how you say NORSK?
Yeah, Norsk Hydro.
Yeah, they are shutting down their Paragomas mine or something like that. Anyways, all you need to know is aluminum prices exploding overnight here. So that's why you're seeing Alcoa trade up. I've yet to figure out why Century Aluminum is trading down. So if anybody can help us with that, let us know. I don't follow CENX enough. Maybe they have exposure over here to this mine that's shutting down. I'm not sure. But CENX is down 10%, but despite aluminum price trading up. But Alcoa absolutely exploding this morning, trading up 6% here in the pre-market, 44.10. All I'll say is on this, it seems like every time Alcoa explodes to the upside, it's a selling opportunity. And here I am talking against my book again, because I do own Alcoa in my long-term investment portfolio. One of the first stocks I bought, and it really hasn't been a good one.
Trading at the highs of the pre-market session. It's trading at 44 and a quarter, up 2.69. What I like to do is, can I find something on the dailies to, give me a little bit more confirmation here? Not really. I see a 44 even high. This is on September 21st. But the big resistance, if this rally can continue, I see a pair of highs just above 45, another one at 45.47. So if you're buying this open for strong follow through, you want to see it run up to 45, get over that, clear that hurdle. This is a big move. The stock has been in a bit of a downtrend. So some people may be using this little relief rally to lighten up on some long positions.
I would just point out that there are actually two refineries that are closing. Norsk shut down. They shut down their largest refinery, and then that triggered another shutdown in the Paragominas one that you mentioned. So there's actually two refinery shutdowns this morning, sort of reverberating throughout the sector. But again, we don't know why Century is trading up.
Maybe they have some exposure here. Not sure either. So let us know if you know why CENX is trading down. I did a quick search through my news, and I didn't find anything. I even searched on Twitter. I didn't find much on it either. So CENX getting the beats for some reason. Obviously, there's a few people who know why. This is not just out of the blue. This is something on news. You can tell by the way it's trading. So there's some impact here from this shutdown here. So if you follow CENX, let us know. It's a stock that I don't follow closely, at least not the fundamentals. Let's talk this Brazil. Brazil absolutely blasting off yesterday, blasting off again this morning. If you want to look at the Brazilian ETFs, there's a bunch of them. EWZ is probably your easiest one to look at. You can see taking off here. This is all on the polls for the upcoming election here, Spencer. What was the details overnight? Why Brazil so hot here again?
Well, a new poll said that the far-right candidate has an even larger lead than previously thought. But the big thing to know is that the election is happening in a couple of days here. So it's happening October 7th, which is over the weekend, right? So
Sunday.
Sunday.
But, which it will.
Well,
Monday for them.
Sure. So are the no that. And in any case, October 7th. Okay. In any case, October 7th is when the election is going to be.
They're not much ahead of us. They're just south of us.
Right. So I mean, the reason for the pop was the news that there is a larger lead than previously thought for the favorite, but still, this is one that I'd be watching Friday and Monday.
If you want a list of the ETFs, so EWZ, I would say, is the main ones. BRZU, if you like the triple levered stuff, that's trading up 15%. I don't like the triple levered stuff. If it's up to me, I'd just buy 3 times as much as the non-triple levered stuff. BRF is a smaller cap one. These are ETFs that are tracking over in Brazil. You have EWZS, which is another small cap one. FB Zebra, that's another one. These are smaller volume, though. The main ones are EWZ and BRZU. Stocks that are trading over there, I automatically, whenever you think about Brazil, you think about PBR. PBR, and I'm not talking the past blue ribbon beer. I'm talking Petro Brasilia, however you say it. PBR and PBR.A always seem to move around. They're big holdings in the EWZ, and they are getting a big pop here today, too. You got some banks trading up, ITUB. Also BBD is down there. It's up 8% this morning. Vale is over there, VALE. That's trading up 3%. So anything that's Brazilian is taking off here this morning.
I would just mention, as far as the ETFs, if you're looking for a good ETF screener, you want to know, Dennis just listed off 10 ETFs that are Brazil ETFs. ETFDB, as in database, ETFDB.com has a great ETF screener. You can filter by anything really. And you can just search for any Brazilian stock ETF there, or a bunch of stuff. But that's how, I don't know how you found your list, but that's how I find my ETFs.
That's nice.
That have exposure.
That's nice to have those lists, because with the stocks, sometimes there's some opportunities there. And if you're doing arbitrage or doing different things, it's good to know all those stocks. And not only that, just to not get caught by surprise, because some people might trade Vale. I mean, that's an actively traded stock, and they might not realize, oh, why is that up? Well, it's Brazilian. So, and it's not Vale Resorts, it's VALE is what I'm talking, Vale ADR. And anything Brazilian this morning is blasting off.
The ski resort. I didn't know that.
I'm never going to hear the end of that one.
That's Mountain, Joel. Don't trade. I saw this happen once.
I'm never going to hear the end of this.
On CNBC, this is a good story. So you know how retail, and there's a lot of traders just buy everything they say on CNBC. They started talking Vale on CNBC, but they were really talking about they were really talking about Vale, like in Brazil, and everybody, or they were talking Vale Resorts, and everybody started buying VALE because of this thing. And I saw it taking off, and I think it actually, somebody might have messed up on CNBC or something, said anyways, they showed on the screen, they showed the wrong stock. So they showed, I think they were talking Vale Resorts. I might be getting it backwards, but it was like a couple of years ago. And then they showed the stock of VALE on the screen. Well, the editor in the background wasn't realizing it's not VALE, it's Mountain, MTN. And I see VALE taking off and going straight up because they were doing a bullish segment on it. And meanwhile, I was like, that's not the stock they're talking about. So I think I actually shorted it on the pop, and then then they corrected, oh no, it's MTN, and then the thing came back in. But it's funny. I think there's actually algorithms almost sometimes, because it's really fast when they start doing like a bullish segment or a pitch on Fast Money, or Kramer starts featuring a stock that he wasn't talking about earlier. You'll see these stocks sometimes go 2-3% just because they're getting featured on CNBC. And when they give the wrong ticker symbol and it's the other company they're talking about, there's obviously an opportunity for the astute trader who realizes they're talking about the wrong one to play the short side on that. So I might have got it backwards. I might have been talking about Mountain or Vale, but I remember they got it confused, those two. And they showed the wrong stock on the screen, and the wrong stock started going up. It's funny.
I just want to you mentioned a lot of the Brazilian stocks. I just want to mention the EWZ ETF trading up $1.72 at 37.33. And as Spencer pulls up the daily charts here, you see a trio of highs. Let's just call it 37.50, 37.60, 3 highs, boom, right there. So you haven't quite hit that in the pre-market. Big move overnight, but keep an eye on that. That will be your leader.
Jump over here to other individual news. We do have a Homebuilder reporting earnings, and it is popping on it. And I'm going to give you, a scenario here. LEN getting a lift. We are off the pre-market highs. Give us the results, Spencer. We're going to break down this trading action.
All right, Q3 EPS $1.61 versus $1.19. Sales 5.7 versus $5.64 billion. So a very nice EPS beat, and also a slight beat on the sales.
And stock traded up to, where do we get, Joel?
We're talking about Lennar, right?
Yeah, LEN.
Okay, no, because I was reading a note here from Brad. So Dennis, you don't want to know where it traded.
Oh, yeah, 49 or $50 or something.
50. Right.
50.
Right
yeah.
on the
Again, guys, use KB Homes as your indicator here. We talked about this on the show. KB Homes got the big pop on earnings. We dogged it. We were, basically saying to fade it. I didn't trade it, wish I would have, but it came right back in. Is Lennar going to do the same thing? One thing going forward, which is going to be a nice segue into our next segment here, is value stocks and stocks that actually make money came back into favor yesterday in a big time way. You see the Dow trading up and people were looking, why in the hell is Roku down $4? The Dow is hot. Why in the hell was Twilio down? Why are all these, growth stocks, which are typically the ones that lead us higher down? Because it was clear rotation. They were rotating out of the high multiple stocks and going into the low multiple stocks yesterday. That was clear. This has happened before. It seems like it only lasts for a couple of days and then the cycle resumes itself to growth over value. In one day, it's going to last for longer than a day or two. But yesterday, it was very clear that value had come back into favor. You even saw the value tech stocks like Applied Materials, Micron starting to catch a bit. AMD, which is a growth chip, obviously going the other way. Intel, huge pop yesterday, popping again here this morning as value tech came back into favor too. So it wasn't just value all around. Value tech came back into favor too. So what does that mean for Lennar? Well, you have two things. One is that they just like to sell home builders on the strength, which they've already done. But I don't know if it's going to pull a KB Homes and give it all back because, again, value is coming back into favor, and these companies make a lot of money. So these are value plays. So is Lennar going to, potentially hold on to some of these gains? I think so. I don't think it's giving it all back because I think value is back into favor. So you know what? As it gets closer down to lower 47s, I might actually even try from the long side. But that's the call. That's the only reason I think it's not giving it all back because it seems like every home builder gives back its gains. That being said, again, don't chase these things on these initial reports, especially stock like Lennar that's been in the gutter, because you came right back up to the old 50. I mean, it's getting half of its losses back from the last 2 months. There's people looking to cut those losses, and they cut it quickly in the pre-market.
All right, let's take a look here at the pre-market trading.
Let's go on General Motors.
Yeah, what's going on with General Motors?
I got it. We got an investment here from Honda Motors. They're investing $2.8 billion over the next 12 years.
Honda? Is investing in GM?
Yep, to help them build out their autonomous vehicle operation.
Yeah, just said the autonomous word with GM.
Just say autonomous. Just say the word autonomous.
That is the buzzword, and they like that. So here it is, GM getting a lift. Wolf last night upgraded the stock. What timing by them? Because the stock was trading up about 10 or 15 cents last night on the upgrade from Wolf. And now you look at this and Wolf, I guess. I don't know if I'm saying like a dog, Wolf. But now you get this GM autonomous. So Honda joins with Cruise and GM to build new autonomous vehicle. So what's this doing Tesla? Curious. Tesla's giving back a little bit because Tesla was trading up this morning.
Yeah.
On a possible new exec. So Tesla is actually leaking on this. What about Ford? Or just hanging out?
Ford, come on.
Ford's left in the dust because they're not doing anything. Anyway, big pop for GM.
It's a huge pop for GM. Put it in a hard bottom. You had a big accumulation going on in the lower to mid 33 handle. You had 1, 2, 3, 4, 5, 6, 5 out of 6 highs within a quarter point range, and that's just a sign of an institution accumulating stock. Big volume yesterday too, so the big boys really stepped it up. Trading over $35, $35.27 is your pre-market high. Let's see if we can find anything in here. $35.38. Take that out. I'm a believer here. Buy it on strength. That was your September 24th high. Opens up a buck to $36.49 after that. So big, really unusual move for GM here. And
huge move. It's a buzzword. Got to be cautious. I will just say I'd like to be cautious with it just because it is a dog. It's been a dog. It's getting a nice lift. We don't know all the details. It's just broke at 8:15, so it just broke 4 minutes ago. I'm gonna let it digest a little bit here. See, if the market's if it can hold on to these gains. But again, value stocks back in the favor. So it's a stock that kind of wanted to buy. It was actually a stock that I kind of had on my radar too yesterday. Wish I would have bought it. It would have been just obviously pure luck that you get a headline like this, but. I actually was trying to buy it last night after the Wolf upgrade too, but I never got a piece of it. But wow, that's a huge headline for GM. So Good stuff for GM shareholders here, at least this morning. But I'll just say lots of overhead supply up here, 36, 37, 38. Looks like, a lot of overhead supply. So a little bit caution chasing it.
I just want to give some clarification on the CENX and Alcoa. Brent did some digging, and from a BMO analyst, we announced that it was Norsk Hydro was shutting down its refinery in Brazil. It was running at 50% capacity, but will now be fully curtailed. That will put upward pressure on alumina prices globally. Century Alumina is short alumina, while Alcoa is long alumina. So
what do you mean Century short aluminum?
I don't know how they're short aluminum, huh?
What, do they have a hedge on or something?
That's what the BMO analyst said. So maybe
they're hedged or something. Maybe against pricing.
Yep. I know some of the airlines hedge and others
they do.
don't.
So maybe they're hedged, and that's where the hedge is at a lower price. So oops.
Yep.
Bad hedging. Could be.
That's it. That's
if that's what BMO's saying, that could very well be it. So anyways, we're trying to look for the catalyst for why CNX is down here this morning. But wow, that GM news, that's huge. So
still
Ford
going?
Not really lifting. Ford up 8 cents. So I mean, this is definitely specific to GM. Still going. See where it can go. I would just say $36 if it decides to really get crazy. You get up there, you had the double top where you were looking, Joel, at double top. Wow. 36.45, 36.49. You're a buck away from there. If it really starts to get silly, I might try it up there.
Yeah. You think it will get to 36? I mean,
it's hard to fade because value is back in favor. It's a big headline. So, but we saw this, we saw big headlines before driving these dogs up, and they seem to find sellers. I don't know where it can get, but I think you could be early at 30. You're still early. It's the headline's only out there for 7 minutes.
True.
Sometimes the biggest money is made by fading, but it's still going up. So let's wait until we get a first little red candle here on the little 1 minute chart there before we start getting too excited on the short side.
While we're here, why not look at HMC, Honda Motor? It's an ADR.
Let's do it. Yeah. Good call. HMC is trading down on this. So I guess
it's their money. It's their investment.
Yeah. Well, they're investing $2.75 billion in the GM self-driving car unit. So it sounds like, why didn't you invest in your own self-driving car unit? I don't get it.
Is this can you think of a collaboration like this before? I mean, I know we have worked with, an overseas company putting money in the U.S. company. It seems pretty new, pretty unusual to me. But GM has still got the hops at 35.45. Big move, 6%. We'll see if it can get to that $36 area.
Jump over here. I was going to take you to a couple ratings here before we get our first guess. Nike downgrade HSBC to neutral. It's a valuation call here. Stock is trading down 50 cents in the pre-market. Nike retail yesterday. So, value stocks came into favor, but not value retail. Everything retail got murdered yesterday. XRT down 2 points. You had Kohl's, Macy's, Nordstrom's all getting ugly, but all these stocks have had huge runs. So it wasn't just a matter of, it was kind of like the stocks it was value getting a lift, but it was also the dogs that were getting a lift. The dogs were barking yesterday. The retail has not been dogs. I mean, you've seen a huge move in Kohl's. You've seen a huge move in Macy's over the course of the last year. You've seen a huge move in Nordstrom over the course of the last year. So it's not surprising that money was flying out of the stocks that had been performing well and flying into the stocks that have not been performing well. So it wasn't just a value play. It was a little bit more of a what has been a dog play. That's what we want to buy right now. What has been going well, that's what we're selling. That's what we saw yesterday. So going back to retail, Joel, Nike is downgrading. Nike got hit yesterday.
It was
simply because it was,
huh?
Yeah.
Let's see here. I mean, Nike's had a major run, new all-time high just a few days ago, trading down 51 cents in the pre-market. 82 sticks out to me. We haven't seen it yet. We've had some buyers coming in ahead of that. No, 81.95. That's your pre-market low. 82, that was your low. I'm sorry, 81.95 was your low on the 26. Have not seen that yet in the pre-market. So if you're looking to bring some shorts in here, 82 is a potential level. 82.04 was low on the 12th. However, if you take out 82, man, there's not a lot in there, a lot of air down to $80. So 82 is an important level for Nike today. And boy, oh boy, it's down $2 and then it gets the downgrade. We'll see what happens with Nike today.
Trying to bounce back a little bit this morning. Alibaba's up $2.77. FXI, EM, both trading slightly in the green here. Some of those smaller stocks that we used to follow, I don't really follow them as closely now. HUYA, IQ, those are both still in the gutter. They're getting a little lift here this morning, but I think it's nothing more than a little bounce after being in the gutter. HUYA has just turned completely ugly here now, giving back almost its entire gain. That huge run when it went from $20 to $50 in June, that is gone. So again, this is how these stories end. You get these crazy names that trading up on crazy valuations. They get hot for a while, but eventually these stories, fall and they start to weather out. And you look at them 6 months later, and they typically give it back. That's why I keep saying the same thing with the NBEV. And the getting's good here still right now, especially IGC. The getting's good.
Well, there is
eventually these things are going to not be probably where they are right now. But
there is
I mean the party continued yesterday for IGC.
There is one of those Chinese names though that has news this morning, and that is Billy BILI. They got an investment from Tencent, 300. You got to look around the sector. $317 million cash infusion from Tencent, and so there we go.
And that's the biggest company over in China. So when you get Tencent investing in it, that's like basically Amazon investing in you over here, or one of the big guns. That's how equivalent. Tencent could eventually be one of the biggest companies in the world if it isn't already. So I mean, that's a huge vote of confidence for BILI. It's interesting that This is what's interesting, is if you look at HUYA, you look at IQ, they've been going down, down, down. And BILI has really held up for the last month and hasn't been going down. Now you get the big investment. So you wonder if there wasn't some accumulation going on ahead of this. I know, not saying everything is crooked over in China, but the regulations are a lot less. And I don't know. I just think, there might have been a few people who may have known something like this coming, because the BILI has held up so much better than the other stocks.
Yeah, it's been actually July. I mean, it came down, but it's got a long rounding bottom there, getting a nice pop, trying to get the highs of the pre-market session. I mean, initially I'd say, 15, was a barrier, because you had all these highs at 1470 and 15. So it's cleared 15. So I think above 15, I'd be leaning to the long side. I think under 15, you may give some of this back. Not a lot on the dailies, absolutely nothing on the dailies to lean on until your June 27th high of 1630. So if you're looking for more on the upside here, keep an eye on that issue, 1630, June 27th high.
Just jumping over here just to the other ratings, because that's where we want our tangent from. You see Tempur-Pedic catching an upgrade here this morning, but that's not the story. I saw a few people on my timeline saying, Tempur-Pedic's trading up because it caught an upgrade from, what was it, UBS?
Yes, UBS upgraded to neutral.
They upgraded this morning, though, after the news last night. So Tempur-Pedic was trading up last night because their chief competitor is closing shop. So you have Mattress Firm that is done. So, and this used to trade, obviously, and Mattress Firm bankruptcy is a notable positive. This is from Piper. They've got a note saying Mattress Firm bankruptcy would be a notable positive for TPX. So basically, top competitor here for Tempur Sealy is gone. And that is why TPX is getting the lift. That is why UBS is positive on this morning. That is why Piper is positive on this morning. Wedbush is coming out reiterating their outperform on Tempur-Pedic after the Mattress Firm bankruptcy. So all about Mattress Firm this morning, going off the board, and that is why TPX is trading higher.
Can't you buy mattresses on Amazon? So, I mean,
but that doesn't. Well, we've already talked about this. Every time Amazon tries to Amazon something, it goes down and then it comes back. Wow. So even if you can, is it really like? It looks like that's always a buying opportunity when we say, this is going to get Amazon and they're going to eat their lunch. And yes, the stock goes down for a bit, but it seems like they still buy stuff at Tempur-Pedic. They still buy stuff, from,
I guess they got to sell the mattresses, right? Where do they get them from? Tempur-Pedic.
But don't you want to lay on your mattress? Like, do you want to just buy a mattress? Because mattress is something, it's a big purchase. You want to go in there, you want to figure it out, lay on the mattress. Oh, I like this mattress. This feels soft. So I don't know if it's as easy to just say, I'm going to buy it online, because it's like clothes. Don't you want to try the clothes on? I mean, some people buy clothes online, but I mean, I would like, I think they're a little bit more inelastic, to the Amazon effect than you think, because I think a lot of people like to lay on their mattress before they buy it.
Yeah, you go to the store, you lay on the mattress, you get on your phone, you go on Amazon, you buy it, and you leave. I don't see what the problem is.
There's that too.
Nice pop here in TPX. Not a ton of value, trading up 467. A lot of people be looking to get out on this pop here because the stock's been straight down pretty much since August, mid-August here. Let's see what happens if we can continue to get up to 54. Pair highs 54.10, 54.14. Pre-market high is not. Pre-market high is 53.99. So big. You want to see this thing get up to 54, take out 54, and keep on going, or could give back some of these gains over the news. But trading up nearly 10%.
Any other ratings?
Yes.
For jumping on at you?
Yes, there are a couple, and we'll do one before our guest, or if we can get to both, we will. But Twilio has a new street high price target. This is from D.A. Davidson. They initiated Twilio to buy and announced a $99 price target on Twilio.
Getting a pop here this morning on that news. I do have a small position in this. Just bought it last night off the upgrade or off the D.A. Davidson note, but I'm going to sell it here today too. So just an overnight trade off the D.A. Davidson note. So I'll limit my commentary on that.
Man, this thing really moves around. Big range yesterday. I mean, it lost 4 sticks yesterday, so I'm sure they're going to see some offers out here. Up 81 cents at 80.38. Hard to give you a level from yesterday. I mean, yesterday we're above yesterday's low and above the close, but I don't think you have a chance of seeing yesterday's high at 83.63. So maybe try a whole number, 81, 82 for potential resistance in this one. And Dennis, did we do any?
Well, there was one more rating. Can we get you real fast? And that was Stiefel catching a Stiefel was getting downgraded. At JMP Securities. Upgrade. Sorry, upgrade to market to outperform at JMP Securities. So SF.
Stiefel is usually the one I'm looking at that is doing the upgrading or downgrading, but they are getting upgraded here this morning. Stock is trading up 1.5% in the pre-market. Kind of been ugly. I mean, a lot of the brokers, a lot of the financial stocks have not been performing well. This has been leaking here too. I don't know. I guess $50. I mean, you can lean on that if you want, but the trend is still not your friend.
Trading 51.55. These are just really small trades. I keep an eye. There's a double top to contend with, 51.74, 51.83. So you get above that, and I think you got some room to do some work in the $52 handle.
All right, it is 8:34. Let's take a quick break and grab our guest for the day, David Russell. He's the Vice President of Content Strategy at Tradestation. He's always watching the market and has some ideas he wanted to share with us. So we'll be right back with David in a moment. All right, welcome back, everyone. Spencer Israel, Joel Elconin, and Dennis Dick, now joined by David Russell. He is the Vice President of Content Strategy at Tradestation. David, how's it going this morning?
Good. Great to talk to you guys.
So you are watching kind of the same thing as that we are this morning. We were just talking about Brazil overnight. We're talking about yesterday's rotation into value names. I guess we'll start with the rotation first. What was your thoughts there, and kind of how are you approaching that yesterday?
Yeah, so my view that's interesting is, we work with Tradestation, and one of the things here we're always looking at are things like, the radar screen. And one of the things I notice is some of the best performing companies in the S&P in the last month are actually companies like, XEC or AVGO. These companies are not at 52-week highs. And it's just kind of interesting to see a name like Conco Resources, CXO, that's been powering off the lows. So to me, that's the first thing that's interesting. And in many ways, what stands out to me is kind of energy and some of these forgotten industrial names. And one of the big ones is obviously Boeing, which has just now broken back out to 52-week highs. But if you look at a name like Caterpillar, for example, here's a name that really, is in many ways similar to Boeing. It's just kind of consolidating back above that 200-day moving average. There has been money shifting in that direction. And that seems to be right now where the strength is. So I've been looking at some of these names, that are less exposed in some of these big areas like Facebook and Google. Those areas, there's been so much money locked up in those names, and now people are looking for opportunities in other places. And Brazil is just another one like that. I think it'd be very interesting to compare right now Brazil against China, because I think you have a classic case of there's still, I think, a lot of people who are just kind of trapped in China. There was an upgrade this morning of Alibaba, but the question is really, these companies now, when you look at the economic data out of China, you really have to wonder, and all these IPOs have been coming out and not doing well, like NEO. I'm looking now almost for downside in some of these names that came out like IQ and Huya. They were big deals, and then they've just drifted. To me, going into year end, those are at risk.
Going back to the rotation for a second, what about Roku? That's been talked about this morning in our chat room. Do you have an opinion there, or have you been following that story?
I was very much bullish on Roku as it was breaking out of 65. I haven't looked at it more recently. In my view, this is one that you might want to, that would be a little bit more tricky here. I think it's been a strong name overall, but some of the higher multiple tech stocks haven't been super. And I think when you look at what's happening with interest rates, and this is not a value stock. So I think right now this is a company that is definitely, doing very well. But I'm a little bit wary right now of these sort of companies, sort of the higher multiple tech names. It seems to me there's more of a rotation towards some of the more smokestack industry, kind of more old-fashioned companies.
So we saw this trend sort of take hold yesterday. How long do you see this kind of continuing here?
As I look at this, honestly, right now I'm looking at the S&P, and earlier in the week, I was doing some analysis for our clients, and I was saying that essentially one of the things that bothered me was the outside day we had on the S&P on the Fed day. It was this big, higher high, lower low, and that can often be. We haven't really broken out of that since, and even if we look today, I think right now we're actually more at risk of a modest pullback and just a period of consolidation. Now, this chart, you can actually see how at the end of last year, the S&P had a steepening uptrend. And then right now it's pushing the same top. It is, if you see there's the blue lines are the longer term uptrend going back to early 2016. And then basically we have another trend that has been in the kind of red rust colored lines. And we're pushing the top of that. We're pushing the Bollinger Bands as well. So for me right now, this is something where you're growing into year end with a lot of strong economic data, and there's a possibility that this market just kind of accelerates and just ramps to the upside. And, to me, it's an interesting setup because at the same time, though, when you're pushing the top of a resistance level, it's a hard thing for a trader to really make that decision. Most of my discipline over the years would say to be selling right now. But at the same time, when you look at the strength, there are times when these breakouts occur, and we very well could be facing something like that. So I think right now, as you look at this tight range you're in many ways, it will depend how it gets resolved. If you consider there are some potential negatives, in fact, when you think of after the jobs report, Then essentially it's like kind of a drifting period before earnings. And then we go to financials first. They're probably not going to be terrific. So that's something that concerns me a little. Will we have catalysts to keep us moving to the upside? But at the same time, strong economy going into fourth quarter and a lot of cash still on the sidelines, there is, to me, a possibility that we see this accelerate. So for me, I want to see how this near-term range essentially works out. Do we break through that outside day? And if we do, I think it could be a gush of money into the markets. And if not, then I think we just want to kind of take a step back. The individual sort of industrial names can keep grinding higher. Some of the others I was looking at was a name like, for example, in Ingersoll Rand, extremely tight IR is extremely tight consolidation pattern. And then there was these other names like PCAR, which are other industrials that are coming off the lows, not really on anyone's radar. These would be the areas where I think we're going to continue to see those grinding higher. So that's kind of how I view it. I think we have to figure out how this range works out. And then basically, in my view, we do also want to be careful of some of the names that have things, especially exposure to things like housing. Home Depot right now, I'm looking at it just kind of drifting here, but a name like that, Lowe's, these are companies where housing is just, is kind of going from bad to worse. And at the same time, we have this wage pressure with some of the retailers coming off the Amazon news. So for me right now, I think it's more going to be a focus on the industrials. There's been real strength in utilities, which honestly is a sector I just don't look at. That's been an area that just continues to outperform. And I don't think people trade it very much, but it's been a very, utilities continue to do well. But for me, I think the industrial names, and then the other thing I would just emphasize is that Apple, though, just the story in Apple is still very strong. It looks like it's going to break out and keep going to new highs. And right now, Tim Cook is taking an interesting approach of just beating up on Facebook and Google rhetorically. And Apple right now is in a place where they can actually see multiple expansion from my, sort of consideration. They're adding these services revenue. These are higher quality revenues. Investors typically reward that kind of company in terms of multiple expansion. So I think a sort of rotation into Facebook a rotation into Apple away from Facebook, could continue. And same thing, rotation into Brazil away from China. That's kind of some of the relationships I see developing.
So the industrial and utilities, maybe if the S&P doesn't break out of the range on the upside, but if it were to, where would you fly to first?
Where would I go first? I think the industrials look best no matter what.
Okay.
Right now. It's just a question of, I think that, I think there's risk if the market breaks lower of seeing like some more pain in some of the names like the Facebooks, the Twitters. And I think that could spread to like an Alphabet and things like AMD that are up so much. That would be the thing that I'd be more worried about. If we break lower, I think some of these like kind of expensive growth names, they could really take a beating. And I think even if we do break lower, though, I think some of these industrials are going to keep grinding higher. This is, to me, a situation where I think we could have what I would call a bullish pullback in terms of pulling back on good news. But the other thing, and that, I actually really should emphasize, is energy. I've been very bullish in energy. On our Market Insights blog last week, we were highlighting the fact that energy was about to break out, and then it did. And I think right now, the other thing that I would add to that list for the next couple of weeks, it's a little bit tricky today with the inventory numbers. I would almost hope that we have a bad inventory number from the energy department, which would then give us an entry into crude or into some of the energy names. But I would actually put energy in the very near term, maybe even above industrials. Right now with the situation with, obviously with Iranian sanctions, there's a clear trend there, and then there's no sign of economic weakening. So right now, it looks to me like some of the energy names, and I was looking, for example, at a name like RIG, it had this quick run up, it's pressing resistance. And that's a name that I think you could see a breakout in. Another name that I've been long, it's been working for me, and it was a real winner earlier in the year, is Whiting Petroleum, WLL. That one looks to me like it has the potential to break out, and it's a very sort of high beta stock. So that's, to me, sort of some of the things that that I would say. I know it's kind of a lot, and in many ways, this is what a bull market is like. There's so many opportunities. When everything correlates together, that's actually the sign of a bear market. And right now we have just the opposite. But at the same time, it can create a lot of just kind of rotation, especially here we are at the beginning of the fourth quarter. So those are really the things I'm looking at. The other thing I would just mention is LB and Monster Beverage, those to me both look kind of gnarly with some real downside risk. And I just wanted to mention those are areas where people looking to the downside. LB has been bad for a long time. It's at the 50-day moving average. And Monster Beverage has had some weak earnings, and it looks like it's rolling over. Those are just some others on my.
We're on the line with David Russell, VP of Content Strategy at Tradestation. David, a couple questions for you here before we let you go. First of all, the pot sector. I mean, do you view the activity of your customers? Do you put certain trading restrictions on them? Those stocks have been heavily traded from a day trading or position perspective. I just wondered how, there's risk to the clearing firms, there's risk to individual traders. I just wondered what the order flow was like at Tradestation regarding the marijuana stocks.
Well, it's funny you asked that, because if you look on Market Insights, we actually had a story about how Tilray, I think it was number 3 last month. I'm not aware of any trading. I'm not in that part of the business, but okay. I mean, it was our number 3 most traded equity. I would say, in terms of looking at these companies now, one of the points I made earlier in the week to our clients is the volumes in these have actually been weakening. And as we, there's always buy the rumor, sell the news. Well, the news is October 17th in Canada. And these look to me like, these could be problematic. If you can add on some of these Tradestation charts, you can add volume or options volumes. And we actually see that the energy and the furor or the excitement over these seems to actually be fading a little. So, that to me is now that this is a case of buy the rumor, sell the news. But at the same time, we definitely saw a spike in activity in Tilray and all the other names like Cron and Canopy Growth. They all saw a big spike in activity last month.
And finally, I've been a big fan of Tradestation for many years. The easy language, I call it not so easy language, but that's because I'm an old guy. Could you just give us like one or two reasons why people should check out the Tradestation platform?
Well, absolutely. It essentially allows you to kind of create a lot of indicators that work the way you like to work. I know a lot of people who spend a lot of time dumping stuff in and out of Excel, and a lot of that stuff you can automate with Tradestation. There's this a program on it called Radar Screen, and you can automate all sorts of things. I use it for ranking sectors, for looking at companies in terms of how they're doing against moving averages and MACD. So to me, it's really a way that allows me to very quickly pull a lot of information out of the market very quickly. So I would just say that if you're one of these guys who has like 10 Excel sheets and you're just going to beat your head against the wall, come to Tradestation and take a look at Radar Screen and some of the ways you can automate that with easy language.
All right. We've been on the line with David Russell, the VP of Content and Strategy at Tradestation. He mentioned his blog a few times. You can find that at insights.tradestation.com. David, thanks so much for the time today. And I'll talk to you a little later, but have a good morning.
Thanks, gentlemen.
All right. All right, Joel, where are we at in the S&Ps?
We're just hanging out at the highs of the session, 39.5, up 11 sticks here. We talked about GM, that pop here. We're looking maybe for 36, but you have found some sellers here in that area. I did mention 35.55 is your pre-market high. You did have only one high at that area at 35.38. So it seems to be an area of contention here. Dennis, imbalances, we could go to that. I know you wanted to spend a few minutes talking about your opening routine. So
yeah,
what
let's give you a quick imbalance look, and then we'll jump into the opening routine. Square. Getting a nice pop here this morning, up on 77,000 shares to buy. Has been buying balances in Square every single day. I do have a short position in Square. I've shorted the pop here, and the reason for that, and this is just a short-term day trade as well, but the reason for that is I think you got some topping formation here coming around at $100. So I'm just banking that. I think this continuation of maybe Momo to value continues today. So I'm actually using this opportunity of the pop and some of the Momos to either get short or lighten up those positions. So I could be wrong, but that's what I'm just thinking on Square. It's about it. They're small. They're small across the board. Alibaba is getting a nice lift here this morning. It's got 27,000 to buy. It's up $3, but the balances are pretty small.
All right.
All your Brazil stocks too, like PBR 85,000 to buy. Those are all getting left, but we already talked about those.
Yep. Alcoa's just kind of hanging out here. CNX continues to move lower.
Let's jump over here. So question that came to me from Twitter last night. This was from Bobby, and he was saying, Dennis, can you just explain your first 5 minutes of trading? About the price discovery period. He's asking if I could show some charts of my recent trades. I can't show my actual platform. That's compliance issues. Bright and Goldman, I don't think would like that. So I'd get in some trouble for that. But I can talk to you about, how I go about the opening few minutes. Obviously, my trading style is much different than a lot. I do a lot of statistical arbitrage. So there's a lot of different statistical arbitrage opportunities that present themselves on the open. I'm typically closing overnight positions. If I was in something from last night, maybe I bought something for an upgrade and I think it wasn't up enough. That's a statistical anomaly as well. I might be closing that out. But what I'm typically using, so I'm very busy, and we know I get off the show at 9 because 9 to 9:30, I'm typically placing orders strategically to take advantage of where I feel a stock might open too high or too low. So different information tools that I'm using, I very much use the opening imbalances. I always have. I get this all the time that people will say imbalances are useless. I will say the closing imbalances pretty much are useless most days, but the opening ones still have a lot of relevance. None of traders use the information that they give you on the opening imbalances. The imbalances are just the feed that's being disseminated from the NYSE floor. They come out at 8:30 and they change continuously until the stocks open after 9:30. NASDAQ imbalances are posted at 9:28. So they only give you 2 minutes. So it's a very busy 2 minutes. That's why you often see NASDAQ stocks spike down or spike up at 9:28 because that new imbalance information on where the projected opening price is comes out. Now, actually, on the NYSE and at NASDAQ, they both come out at 9:28 with projected opening prices. So it's basically telling you where these stocks would open if they open right now. Now, new orders can still come in, especially on your New York stocks. And NASDAQ closes it up for a lot of different traders. There's still floor traders that can get them in. But for the most part, NASDAQ, it closes up after 9:28 for the opening print. If you don't have your orders in there by 9:28 for the open, they won't get in on the opening cross. On New York, it's not the way. New York, you can keep setting them until the stock actually physically opens, even if it's after 9:30. So what I'm doing is I'm managing right now. For instance, I have from overnight, I have 24 positions. So it was a light night for me. I usually have anywhere from like 20 to 100 positions, depending on what's been happening overnight. Depends how active I was overnight. Depending on, some of these I bought at the close, and, I might have a strategy. I've talked about lots of these strategies before, where I see momentum. So right now I'm, got this in my head that I think value is a little bit more in favor than growth. So typically I'm strategically placing myself this morning to be selling some of the growth names and maybe buying some of the value names on the cheap. I could be wrong with that call, but that's the call I'm making. I mean, always with trading, you're making little calls. So I'm seeing, I saw that rotation yesterday, and often it continues for a couple of days. And I'm banking, I'm strategically placing orders and basically selling the pop in stocks, like I said, like Square, like, potentially Roku, stocks like that are getting a nice little lift here today. I'm saying there could be some follow through here this morning. So that's just my opinion. If I'm wrong, I'm going to have to work out of those trades very quickly. So typically when I'm entering trades, like let's say I'm just making a call today, for example, I think, some of these momentum stocks might get hit. So, and they're giving me a nice lift. They're giving me a nice entry point to try from the short side. So if I try Roku or Square from the short side, I will not give it a long leash. So if I do not start to see immediate gratification, what I mean by immediate gratification is after the open, I want to see some selling pressure. I want to see some sellers come in at least, fairly quickly within the first minute. If I'm not seeing that, I'm going to now start thinking I might be wrong with my call. And I'm making multiple calls. I mean, if I get 30 or 40 different stocks on, some of them are going to be wrong. So what I typically immediately do is, people say, how do you manage 30 positions? Well, I let the winners just be. Let them be. I don't worry about the winners. Winners work out themselves. Sometimes winners grow into bigger winners. What I typically do is go immediately to the losers and start going to damage control. Because when you have 35 trades on, you will have a loser. You're not going to be 35 for 35 with winners. It doesn't happen. So I typically go to the losers. What's happening here? Is there liquidity? Can I get out of this position? Can I, use different ways to work out of it? But I'm doing whatever I can to minimize the damage from my losing positions. And then, I go, and once I start to work out of my losing positions, then I start to focus on the winners. I might look at a chart, I might look at some different things, but typically I'm not using a lot of charts. I mean, you got 35 positions, now looking at 35 different charts. I'm just looking, I was in these trades for some statistical anomaly, whatever it is. Maybe it was a rating change, like I said, maybe it was a 2-day move strategy, maybe it's just typical rotation. Like yesterday, I was shorting banks off the hop. That was because the TLT was trading higher. And we know there's an inverse correlation there. So when you see the TLT weak, banks are usually strong. TLT strong, banks are usually weak. This morning, we are seeing the TLT trade down. So that is good for the banks. So right now, I'm biased to buy the banks at the open. But I'm not trading way up and paying way up for a Bank America. I'm not going to pay up 1% for a Bank America. But right now, I've got it, and I've got it all broken down by different sectors too. And I'm giving you a lot of information. I'm kind of going all over the place, but I'm trying to give you a glimpse of the stuff that's going on in my mind just for this morning, what's going on in my mind every day at the open. So I've got a bias right now because TLT is down. That means utilities are going to be a little bit weaker. That means interest rates, dividend stuff is going to be a little bit weaker. So I have a bias to sell that stuff short. And I have a bias to buy the banks because they are typically stronger so if, for instance, I might go after like a dozen banks and maybe 10 of the 12 open up over like 1%. I'm not going to get those. I'm using OPG orders, opening order only orders to get to put those orders out there. An OPG order will cancel if you do not get filled right after the opening print. So I don't get a stock all of a sudden that it starts to turn and go the other way. I don't want to start getting filled on all my banks. So I'm trying to grab a statistical anomaly that maybe one or two of these banks might open a little bit too low, and then I can get, that clear upside to it. Yesterday, for instance, with the TLT, I believe was, and I'm trying to go from my memory, I believe it was trading up. I was able to get short Morgan Stanley, and Morgan Stanley actually coincidentally even had a downgrade. That was on the opening print of 46.70 and immediately came in like 25, 30 cents. There was a little bit of spike afterwards, but I was already out of the trade. But not only that, I hedged myself. So I was able to get Morgan Stanley. I was able to get Citigroup long. So I kind of had myself hedged. Those two stocks will typically trade together. Citigroup opened way down. Morgan Stanley opened up. That's just a classic pair trade, doing some arbitrage off the open, and you look for that spread to come in. So lots of different styles, lots of different trading going on. But overall, if I just had to say, and to wrap it up in 1 or 2 minutes here, it's discipline. Going to my losing positions, exiting the positions that I was wrong on my day trading calls on, and kind of letting the winners ride a little bit. And that naturally happens. I mean, when you're working your losers, you're working a dozen losers or whatever it is. You don't have time to go and look at your winners right now. And sometimes, it works out. And sometimes, you'd be like, oh man, I wish I would have taken that winner. I was up a lot and then I didn't get out in time. But more often than not, I often say this. If I'm like, I've got a pretty good feel for today and I'm right with my calls, the best thing I could possibly do sometimes is, just be slow. Because sometimes the best thing you could do is actually get up, go eat breakfast, come back, and I would have made a lot more money. For whatever reason, I've never been able to do that. It's a scalper blood in me. But a lot of times you see these trends that start very early in the morning, continue throughout the entire day. I know we have a few traders in our firm, Bright, that actually will, make these typical calls that I'm making and hold them for the entire day. And they make more money than me because of it. But I've got the scalper blood in me. I get out too quickly and, I go both that way. But I mean, Joel, you had a lot of experience with all this back in the day too, trading the opens, doing different things. So maybe we can go a couple minutes over. Give us your thoughts here, on how you used to trade the open, because you used to trade it fairly actively as well.
Yeah, they're best when they realign, when they align with good numbers, and just like an example in the S&P today. Of course, it's a different open, but you had a couple closes in the same area. You had the daily pivot in the same area. So if you could get your opening numbers to coincide with a 2-star or a 3-star or something on your dailies, that holds more validity. Also, certain stocks are more characteristic to follow their opening prints or, 20, 30 cents away from the actual opening price. But really, for me, I'm a little bit more technical than you. I really like the setups that like coincide, with, if stock has a strong day, closes near the high, boom, opens up near that area and takes out that high. You talk a lot about, the 2-day moves or whatever. If there's a stock that, like I was looking at, I'll give you an example for today. I was hoping to see SFIX in the lower 28 yesterday. It didn't get there. And only, where did it get to? It got to 20. It did get into the 28 handle, but it didn't quite get to where I wanted. I think the low in that was 28.55. So I might have been a little bit picky, but I was still hoping to see that like 28.30, 28.40. That was in the middle of a bunch of lows. Now that, it's trading up today, now I'm going to have to bump it up. Now, if I could see this unchanged on the day, I'd be more inclined, to take, a possible long position and then be prepared that it may go down to the lower 28s and test that low from yesterday. So a lot of it is, being prepared with the stocks that you trade and then being able to make adjustments, to what, and the SPOOs are up 11. I mean, you have no idea how that's going to affect the bigger components. Always like to watch, the bigger stocks in the S&P because, those stocks are simply going to move along with the index. And just, one thing to note from your trading, Dennis, it's different. I mean, you're unwinding. I mean, your trading day for today, a lot of it starts yesterday at 4:00. So
I would say probably a lot of my, I've got 20 overnight positions. I'm looking to unwind those. So I'm trading out of those, but I'm also initiating new positions. And that's why I think a lot of people would be interested in. Okay. Like I said, today I'm biased to try to buy some banks on the cheap, sell some utilities on, just because of the TLT. I use that trade, do that trade almost every day. It statistically works. So typically it doesn't work all the time. But, we always live as traders, we live on the edge. And the edge right now is maybe utility stock opens a little bit too high. Maybe it doesn't open down much, and then I'll get a chance. I mean, you can look at the XLU. It's trading down 15 cents. That's the easy way to look at it. But the TLT is, a great indicator on that. So there's always different things. Like I know Alibaba's trading up here this morning. Somebody said there was an upgrade. I didn't see that. Maybe there was. But China's trading a little bit stronger here this morning. So maybe I can get one of these Chinese stocks that opens up a little bit too cheap. So I'm basically blanketing the market with orders out there, looking for something, that might open a little bit too cheap. So I've kind of got like a little fair value going on in my head, and I'm buying the stocks that I think are going to be stronger today, and I'm selling the stocks short that I think are going to be weaker. Always trying to trade market neutral, and this is the way my style is. So if I got filled on a whole bunch of longs off the bat, I would probably short a bunch of S&Ps or Qs against it. SPY against it, because I'm trying to trade market neutral. I'm not trying to make a market call. Sometimes I make market calls and I won't trade market neutral, but 9 out of 10 times I'm trading market neutral. I'm not trying to call the market. I'm trying to call a specific statistical anomaly that I'm identified. I'm trying to extract the alpha from that. And if the market all of a sudden tanks and I'm with a bunch of longs, my alpha might have been able to be extracted, but I'm going to lose money because the market went down overall. So that's, why I try to trade market neutral, is because I'm trying to extract those little statistical anomalies, and I need to be hedged in order to do that.
All right. One thing, Spencer, before you wrap it up, and this really doesn't have much to do with the markets. And Dennis, you won't get this, but at 2:18 today, you're going to receive a cell phone alert from the president in the first national test here at 2:18. Not actually from the president, but I think it's coming from.
Wait, he has my number?
Yeah. You're gonna, and I don't know if you're gonna be able.
Why is this?
They're testing a national alert system here. I don't know if they want to, alert everybody at the same time that has a cell phone, but Dennis, you won't be getting that. So
I'm kidding. Cell phone.
Yeah, like it's going to be, even if your phone is on silent, it's going to be like an AMLR alert. So we'll be all waiting for that text at 2:18.
All right. Well, on that note, that'll do it for today's show. Thank you to our guest, David Russell, who stopped by earlier. Thanks to all of you in our chat rooms on YouTube and premarket.benzinga.com. That second one, premarket.benzinga.com, is going all day. So check that out even after the show ends. I want to remind you folks what I mentioned at the top of the show about the Benzinga FinTech Summit. It is coming up November 14th in San Francisco. If you're going to be in the area or you want to learn about the brokerage and payment space, go to bzsummit.com. The first 10 people to use their promo code PMP, as in PreMarket Prep, PMP, will get half off of their ticket. So again, that's BZ Summit. .com. And on that note, we're done here. So thank you guys for joining us and sticking with us. And we'll hope we see you again on Thursday.